Hey, what's happening, everyone? Aaron Jackson here, aka Rotation Report on the socials. This is not financial advice, so I gotcha. There's no legal recourse here. Okay, so back off with the lawyers already. Now, happy Halloween. I guess for Halloween, I'm a guy who listened to one of those motivational podcasts and was just like, be yourself. So I'm being myself for Halloween. So, that's great. I hope you guys are having a great day, great holiday weekend. Real interesting time in the market here, right? So we've got some breadth really narrowing up, I would say. Well, let's start with a few big pictures thoughts right here. We got first up is Bitcoin. Okay, you want to chart the judge risk. Here it is, Bitcoin versus 105, 107,000, somewhere here in this range. It's the biggest chart in the book. You look at the MACD here, it's something where we completely expect this to hold up. You would absolutely expect this to hold up here. But a couple of fake breakouts in a row through the last couple of months, and it's, you need, I think the whole thing about Bitcoin is you need balance sheet expansion from the feds, right? QE, that type of stuff. It's always been correlated to like QE and balance sheet expansion. And, you get to the Fed press conference the other day and they act like they're all hawkish. But at the end of the day, they're ending the quantitative tightening and kind of reinvesting bills. So, we'll see how it gets. If we get into the end of the year and the longer this holds up, the more interesting it is. But time will tell for sure. But the one chart that really just blew my mind, really changed my perspective on everything lately is check this out. A lot of people have been mentioning that, the stock market versus gold hasn't really done shit for a long time. And that's true. But what we have here is the NASDAQ 100 versus gold prices. And you can see, since 2012, 2013 or so, the bull market in stocks really began. This thing's just been working higher slowly but steadily. You see a little bit of a couple-year base there. It breaks up. And this thing has been basing now for nearly 4 years. Again, base. But then in April, you had this key low form, right? And then on the tariff tantrum, bam, broke below it. But then check this out. As trade tensions got hot again, right? You get the fake breakdown. So what if that's just the end of the gold outperformance of stocks? I don't know what that means, but let's just say, everyone's saying AI bubble. Look, the demand is quite real. You can say, well, no, when people charge a lot more for these AI services, people are going to be willing to pay less. That's fair. Maybe that's the problem. But what I see here is we have all the chance in the world for this to be just another massive continuation, and just the NASDAQ 100 smokes gold over the next few years. So, always, I like the metals. I think you get a downturn in the markets, there's a chance that metals outperform because Europe, they're even acknowledging that they need to stop blocking growth and they need to be building, right, and building up their defense chain and their industrial base. So, very interesting chart there, no doubt. And if gold outperforms NASDAQ in the near term, I'm looking to get long more tech stocks. More on that in a moment. But then another big chart right now, the recent IPO, ETF IPO, you can see it's just hanging out. Is that a top above this prior high or is it a base? Everything that I'm looking at would tell you it's a base, but hey, we just don't know. And if this thing starts to break down and holds lower over the next couple of weeks, loses the 200-day moving average, pretty big problem for risk. But all in all, I think somehow, some way it breaks up, but we will see. And then, the people are like, hey, look, it's a K-shaped economy, two-track economy, whatever. And you can see it in the breadth data. The New York Stock Exchange stock only advanced decline line. Check that out. Could be a massive, what was that? Well, that's okay. It's like a 4 or 5 month top. That's what it could be here. And it's been, it would lag, if you're just in a normal economy where for the first time in a long time, businesses are going under, that makes sense that this would lag. But does that mean the AI rally is over? Doesn't have to. And then we could see in the indices, though, we do have, have the NASDAQ 100, and next up we have the S&P 500. They're both kind of at target areas from the prior base that we saw from basically last post-election. So, this selling here makes a ton of sense, completely normal. Does it continue into next week? Does it continue for a couple of weeks? Yeah. I mean, it can. We just don't know. But this selling, this dip here, pretty normal. And if you look at the NASDAQ futures, which I use the futures because there's a lot more data, just overnight data to get you the more true sense of the true range, it's the same thing as the S&P 500. So, you know, sideways above 6750, 6700, something like that, all systems go, completely normal. Nothing to be too concerned about there. But, we do want to get bearish about something. Okay. I've been talking about the bonds, being the risk is skewed to higher rates. Well, we had 7 to 10 year Treasury bond ETF, IEF, with a fake breakout here of that April, that tariff tantrum high. Now, definitely some algorithmic buyers here. You got the rising 50-day moving average. You could see it punch up again. But I think this sent a pretty clear message. And so if we're thinking about it, yeah, some of these data center deals, maybe they can become a problem if you do get the rates to go higher. Long ways to go. And we got the end of the year. A lot of dips are going to be getting bought in tech stocks probably into the end of the year, barring some sort of major kind of liquidity unwind. And so why do we say this about the NASDAQ? Why do we like the tech stock still? Got a lot of good looking at price action in tech. You had fresh breakouts in NVIDIA, Palantir, Cloudflare. They'll be up in a second. But basically, we like these things as long as they're holding these recent fresh breakouts. Palantir, NVIDIA, 190, etc. They start to give those up, then never mind. This is all like a trap. But we're not gonna jump to conclusions at this point. And next up for the watch list for next week is Datadog. Okay, this has shown signs of trying to show some relative strength in software lately. Testing this major lid from 2021 high. Earnings next week. It breaks above. That could be another just monster winner there. And here we go with NVIDIA. You get the big breakout. This is a 195 is a key target extension area. Above that, I think we've got like 250 or some shit, 260. Well, we have 260 would be the next one. So we want to see it hold this big earning or this big whatever gap that was there. Okay. And you can see selling off again today, but just a flat, still holding the gap. It gets problematic, starts to be a little bit of a caution flag. You start losing these gaps here. And then Palantir, another similar thing, kind of working higher, still holding the gaps, holding exactly where it needs to be. Intraday selling with the market weakness makes a ton of sense. But then you get into some of these conference calls and, some of these tech reactions where it's just like, oh my God, they go up, right? It's because just how much data is being devoured by like AI videos and things like that. And just the leisure AI, like people have been talking about, oh, what about the productivity of AI? And, a lot of it's there. And sure, there's some deals that are signed that are not going to come through eventually. But, the leisure AI is just devouring data, and training the robots requires tremendous data. You're creating data to create data, basically, right? And so you have databases like Snowflake here working through this key 240, 250 zone, just punching higher. And you can see this whole chart from the IPO could just be one giant consolidation looking for the next leg higher. So definitely like the database stocks. And then we even had something like Twilio, right? You have this big bottom base here, just another software base, right? And then a nice, missed this one, this little consolidation. Look at this thing. So you got 77, 150. Okay, so from here, we're looking like maybe 200, 230 or something in the Twilio. If it continues from here, I mean, it looks like it very well can. And then Cloudflare, right? People are concerned about it being a bubble and like garbage stocks breaking out. Well, Cloudflare is like best in class, right? They are not a garbage stock. So this is another one where it's like, okay, you get this fresh breakout to 220 above the 220s, 230, whatever the all-time high was. Great. Above that, not a problem. Very bullish. 320, 330, and then 500, I think, are a couple levels moving forward. So, keep that in mind. But again, like, it's like if the market, even if the tech AI rally is narrowing, okay, into the end of the year, we might want to be, we might be just safe no matter what kind of damage there is in these kind of, you want to call them like a nifty 50 of like tech growth, the bigger tech growth. Maybe that's one thing that's developing here. But, keep an eye on it. And then the other big thing, okay, we've got Argentina. Boy, isn't that a controversial one? So last few months, there were, you started to see the pullback in Argentina stocks. And then you get, little rumors that the socialists are going to come up and seize some power from Milei, block them, all that stuff. But then Scott Bessent comes in with a good old bailout. And what do you know? Milei wins the election. So now we've got this giant consolidation, year-long consolidations basically all over Argentina. And now they are in the process of cracking these downtrends in a secular bull market. Very interesting. So this Vista Oil and Gas is a top oil producer. So you want an energy play in a shale with a lot of juice to go here, a lot of prime real estate, pumping that oil. There you go. And then we've got electric utilities. Oh, what do you know? What do you think's next? Jensen's going to be in Argentina, pumping some, GPUs at Malay. I think so. Look at that. Pampa Energia. Look at that nice consolidation breakout. This thing could get real hot into the end of the year. And then here's another energy transport. I think it's just pipelines. I believe it's just pipelines. Who the hell knows? TGS, just another one. Still some resistance to go here, but very good looking consolidation there. Probably working higher in time. And basically, that's just the case completely all the way across Argentina. All right. So yeah, I don't know. I'm definitely trying to get this Cloudflare on a pullback here and net, but that's how it goes. The market pulls back, and then when you eye the best stocks, right? When you're on the best stocks, they don't pull back. So you're like, shit. Okay. But it's doing its thing. And then when the market, selling stops, it probably just continues higher, I'm guessing. But yeah, that's all I have for you from now. Keep your head straight. Don't sweat the small things. And hey, we're having some stops pile up. Okay. A few of these stops, I tried buying dips in biotech this week. It did not work. So, last week you had the small modular reactor plays. They kind of rolled over, and, that's more, we go from no stops to a few stops, and then a few more stops, and then it's just all the stops hitting, right? So I think we're in the few stops hitting phase, but you never know when it will change. And yeah, so I hope you guys enjoy your holiday weekend, and everyone have a great day, and we'll catch you next time.